Thank you for tuning into the All Funds Investment Podcast. This episode features Herwig Konings, CEO and founder of Security Tokens Group, and Peter Gaffney, head of research at Security Tokens Group. In this episode, we dive deep into tokenization, applications, liquidity, use cases, and more. If you'd like to join us in the show, drop us an email, info@allfunds.io, or you can fill out the form below. Currently filling out the calendar for 2024. Lastly, you can check out the links in the description to connect with us and Security Tokens Advisors. We hope you enjoy this conversation. Please make sure to like and subscribe. You guys have been doing this for a good while. I'd love to get, maybe a quick background on your end, Herwig. We'd love to learn about how you started this business, how you found the opportunity, and where you're at.
With pleasure. It's a bit of a strange story. Didn't think I'd be falling into the tokenization world actually 10 years ago when I first started a business called Invest Ready. So Invest Ready, our core competency is doing accreditation software. It was a brand new requirement for private businesses that were raising capital through private markets, and a new rule had passed thanks to the Jobs Act. But they were required to verify that the investors were accredited. This means, having $1 million net worth, right, or a certain level of income, or if you're an institution, meeting certain requirements. And our software basically helped speed this process up, verify that, act as a third party so that issuers could make sure they met the requirements of the law, and investors could actually participate in these offerings. And so, running that, I definitely don't want to say I went to law school, but I got a very good understanding of the different securities laws, the different rules, the different, exemptions and compliance steps required in order to raise capital online. And so that's why in 2017, when let's call it ICOs and initial token offerings were all the rage, I had a company approach me. It was a facial recognition company. They had real investors. They were raising their Series B, and they were like, "Hey, Herwig, can you help us raise money via an ICO? This is so hot right now." And I was like, "Absolutely not." It is definitely, there was a lot of rules that I was already aware of being broken. And I told them, why not, if you still want to work with me, why not actually tokenize the shares you were about to raise money for your Series B? And we can actually do this compliantly. We can work with the right attorneys. So I helped them find the right attorneys. There was, no commercial technology solutions out at the time. So we had to actually go out and find smart contract developers to actually code these tokens to be the right way to make sure they're compliant, as well as, a lot of education with their management team. And finding them the right sort of marketing partners and distribution partners for this. But they ultimately raised $12 million in a short order in like 2 weeks over the web via their offering. It was one of the first tokenized offerings for, real equity for a business at the time in the US here. So that was sort of the light bulb moment to say, hey, there are going to be other people who need this help. There are tons of different applications beyond just startups raising capital. It's all of capital markets that will be affected. And so that's where the business was born.
That's amazing. That's very cool. Trial by fire, as you said, kind of getting into the weeds of things and all the different components of what's needed, right?
That's for sure. The pioneers take the eras, as they say, but I like it more like an aligning of the stars. Just really a lot of my background coming together and saying, this is what it's meant to be, thanks to blockchain.
Yeah, well, that's great. I love that. And Peter, I guess obviously you jumped on board with the company. Love to hear kind of your story as well.
Yeah, totally. Was not too different from many people in the space, but got to like the digital asset space around that 2017, 2018 era. Saw a lot of it popping off. Actually got airdropped a bunch of polymath token. So naturally had to Google what is polymath. Dug in a little bit, surface level. Okay, you could trade real estate, private equity shares was kind of like their play then. The same way you would crypto. It kind of made sense. I didn't know all the mechanics behind it, but got the surface level understanding there. It took a while, obviously, to get to STA with Herwig and really bring tokenization to the career forefront, but spent some time at Global X ETFs beforehand, seeing a lot of the thematic niche tech products and kind of the market appetite around that. Right around the time COVID was kicking off, and you see all the work from home trends, the different cloud computing, fintech, kind of other ETFs that are beneficiaries of that and the sectors. But it was cool. You still see a big divergence between what financial advisors and wealth managers are able to buy and what's actually being offered. And even seeing small ETFs grow and different mechanisms pushing that, very helpful in retrospect to what we're seeing in the tokenization space today. But really, I like the private equity side, like the real estate side, wanted to get back to private markets with like a digital asset focus. I mean, if you marry those two things, that is tokenization in a nutshell. So found STA and eventually came on board and started leading a lot of the research initiatives and kind of building that desk up because there was a pure lack of industry agnostic research aside from all the platforms obviously puffing themselves as the best tokenization platforms out there, showing their clients, but really we need someone to call it like we see it. And it was just a natural extension of our advisor and consulting arm, working hand in hand with issuers, with asset managers, with infrastructure providers. And so we've kind of just used that to feed the rest of the business, if you will, to date.
Yeah, and that's great. You mentioned one of your businesses, but yeah, why don't you go ahead? I know you guys have 3 main business lines. Why don't you go ahead and tell us what those are about and, kind of how they work together?
Yeah, with pleasure. It's when I started this business, and investors specifically were approaching me. How are you going to take advantage of this opportunity? And let's just say a consulting company is not exactly the answer that anybody wants to hear. So naturally, of course, we were thinking bigger, trying to see what are the opportunities in the space. And in 2018, we actually launched, after taking on some investment, security token market. So beyond the advisory, we said, hey, just what Peter was saying, like, there's actually no one single source, one-stop shop, if we like to say, for this information, right? We like to call it price discovery. Like, investors aren't just going to go broker by broker and say, hey, what do you have for me? They're going to go to a broker because they already are aware of a very interesting product that's available that they want to buy. And they're going to do research, right? They're going to say, what's the price activity of this? What is the information behind the asset? Where do you buy it? And that's what our website does at Security Token Market. We actually plug into these different brokerages and these different venues where you can trade, these regulated products, which is a little different than just sort of tracking, the Coinbases of the world. And we make that available via our website, stm.co, so that you can easily go and see what's out there, from the real estate products to the different tokenized fund products to the startups and other different instruments that are being tokenized out there. We try to just make it easy to see and learn about that all in one place. And we do have aspirations that, if we're going to lead the market and sort of teach the best practices with our advisory arm, if we've got this unique insight into the market with our audience at Security Token Market, why don't we actually lead by example and launch our own investment products? So one day we do aspire to actually get in the game ourselves and use our expertise and our insight. But for now, that's on the back burner while we focus on just making sure that we have the best in class research and making sure we have the widest source of information on these different markets, which they're growing every day, whether it's new blockchains, new venues around the world, new listings. It's a great time. It's a fun time.
That's awesome. Yeah, it's always good to eat your own cooking, right? So that's exciting to go through that process. I'm curious, Jim, just maybe from for the audience's perspective, if you can guys can define what is tokenization, right? Because there's always different elements. People tie that to digital assets. Separating that out, what is tokenization as a process, and how would you guys define it?
I would throw it as, tokenization. There's a couple different routes. It's either just natively issuing digital securities for the usage in the whole digital asset space, but more relatable probably to the vast majority of cap markets. It's just bringing assets on chain. And it's just tokenization in itself is just the next leg of capital markets technology. Just like, from financial product wrappers, it used to be individual equities and fixed income. Then it moved to mutual funds. Then we saw ETFs pop out. And now you could use tokenization, a blockchain transferred wrapper, a digital investment fund product, whatever nomenclature. But really, it's just another financial wrapper that encompasses public and private assets alike. And the whole ordeal is that, capital markets there's been such an emphasis on reconciliation and cross ledger reconciling and communication between all the different parties. I'm sure you guys as fund admins you're right in the crosshairs of a lot of that,
right?
In a good way. Like, you're seeing a lot of that, and a lot of it comes down to you guys. The idea of tokenization is to remove or streamline a lot of that, not by getting rid of intermediaries per se, but rather just offering a single and very trustworthy ledger to go off of. And when you have that, you have a lot of the things that, cap markets have been trying to get to, whether it's T+0 settlement, T+1 securities lending, Just, more greater precision to activities like repo and like collateral management and different swaps, where we have four parties on the phone arguing about who gets the better terms and how long a transaction took and what the interest rate should be, or if we're charging it minutely, hourly, whatever. These are very granular examples, but all ones we've seen so far in the market. So that's kind of like the definition, the next technology overlay that is run on blockchain technology.
Awesome. Very cool. That's great. I guess the history of this is, tokenization as an element in the space is relatively new, right? From a few years, 3 to 5 years, maybe in that space here.
Mm-hmm.
Where's that kind of started, and where's it at today? Maybe from your guys' perspective, current state versus what's happened in the past, and what are your guys' thoughts?
Yeah, this technology kind of spun out of the crypto phase, right? So the ICOs were really hot back in 2016 through 2018, and people were quickly putting together that you can use this technology to not just raise funds for protocols and for utility use cases, but for tokenized instruments, for assets, for investments. Which obviously meant that regulation came to the table. That's actually where our name came from. They were very aptly called security tokens as a differentiator to crypto tokens. And the reality was that there was a lot of interest. People see the big picture, even back then, trillions and trillions of securities and assets that are ready to be tokenized, if you will. But back then, the infrastructure was brand new. And again, we can't just go and launch a crypto marketplace and exchange and suddenly start trading securities, right? We need licenses, we need certain regulation and certain, rails in place in order to comply. And that takes time to set up. That takes time to get approval. So what we saw was a lot of these initial companies with the vision come to market. We saw a couple of one-off use cases, a lot of what we call sort of mom and pop deals, the startups like I helped tokenize, a couple of real estate deals and alternative carbon credit projects. You certainly wouldn't see a big Wall Street or a firm or a fund or an asset manager look at this. It was certainly not the case. Fast forward, now that these licenses are starting to get approved, you have real startups that have raised billions of dollars collectively from real investors, right? MUFG, Morgan Stanley, JPM, I believe, many others, Apollo and others. They've all made investments now. And in 2021, we saw actually the first announcements from some of the bigger banks saying, hey, we're actually also getting involved in tokenization. So what I would catch us up to today is over the last 2 years, we've seen a huge influx from Wall Street. I mean, just this last week alone, we saw both, Larry Fink, CEO of BlackRock, and Jamie Dimon, CEO of JPM, right? They both were on CNBC, and Andrew Ross Sorkin, the same guy in this event, both talking about tokenization separately. And how that is going to be the future of capital markets and how it's going to move the data together and it's how it's going to create a general ledger for cap markets to operate on. So I think everybody gets it today. And funny enough, there's also this now new renewed surgence from the crypto community around this. They're calling them RWAs, real world assets. But now they're saying, okay, yeah, we also understand that we can apply a lot of the applications that we took from DeFi, from yield farming and from collateralization and from automated market makers and a lot of these other technologies. They can be applied to real world assets, to securities, stocks, bonds, and all kinds of other applications. And so that's why I think the genie's out of the bottle, if the terminology is appropriate here, where now it's going to get really exciting, I think, from here on out, given that you're just going to see applications from all types, come to market.
Yeah. Yeah, that's really cool. It's cool to see these different institutions being, talking about these types of use cases as well. And on that note, let's dive into some of the use cases. So you mentioned some of the assets that are being tokenized, some of the different structures. Talk to us about the major use cases that you guys are seeing right now for tokenization.
So we cover a lot of this in our research. The one that really caught people's eyes in 2023 was just the flows to money markets and to treasury products as a whole. A lot of these to non-US investors specifically, and there's a couple of reasons. One, international investors love getting access to US products, which is cool, but it's not really the main theme. It's something people could harp upon, but really that's not what's driving the value. It's really that, look at all these institutional asset managers. If you ask any of them, like they're probably not going to park 300 mil of client capital into a non-yield generating stablecoin like USDC, as powerful as it is to underpin, and other stablecoins to underpin the digital asset ecosystem. From an institutional and just fiduciary level, you can't do it. So when treasuries are hitting, 5.5 points, and you have any capital left on your clients in stablecoin generating nothing, or putting it more at risk by third party opportunities that we've seen in the yield farming days, for example, it's just going to be like a non-starter for them. So when you see Franklin Templeton's money market fund 2 years ahead of its time, boom, that's a great use case, generating something. When you see Ondo Finance coming out with their BlackRock short-term government money bond fund on chain, okay, that's a great use case, passes yields right through, or they have their own mechanism. But that's just an example. Now there's a whole cohort of like 15 of those products doing the same thing, generating yield fully on chain, and that's a great use case to get people to look at it. And that's just kind of one segment, and that's like more, right now, more retail adoption, if you will, and Web3 firms and DAOs diversifying into that in their reserves. But believe it, asset managers are looking at it from an issuance standpoint as well. Wisdom Tree, great example through their Wisdom Tree Prime app. Franklin, as we mentioned, and then even behind the scenes, just it's like a low-hanging fruit product to get teams comfortable with the tokenization tech with a pretty simple and liquid asset class that is treasuries. And then beyond that, I love looking at like the asset-backed security side, like HELOC specifically, home equity lines of credit. That's something where you could see tangible savings happen and figure the company who's underpinning all of these right now. I think they've hit somewhere like between $6 and $8 billion worth of HELOC originations fully on the Provenance blockchain over the years. They're now a top 5, maybe even higher than that, HELOC originator in the nation. I won't say in the world because I don't want to talk outside there, but top 5 right now. And that's been such a successful business. They're spinning it off. They're IPOing it in Q1, probably Q2 at this rate. But that's something that's really been disrupted by the tokenization tech. And then, you have the promise of private funds. Eventually, there's still some hindrances on like the nomenclature. And if you're issuing digital native 1940 Act funds versus kind of off-chain feeder funds, that's where things start to differ. But really, you look at those two segments we talked about before, and that's finding some real traction.
That's amazing.
I'm glad you brought these up because I actually did want to dive into these a little bit more. It's really cool to see how much traction is gaining on the debt issuance, the tokenization of bonds and debt, if you will. Talk to us a little bit more about how this works. So you mentioned like money market funds or U.S. Treasuries. How does this work from an operational standpoint? Are these individuals or entities purchasing these treasuries and then tokenizing them, or kind of walk us through how that operationally works?
Yeah, definitely. For the most part, as far as I'm aware, the straightforward method of operation for this is you're going to buy, like let's use Ondo for example. You're going to buy the BlackRock short-term money ETF. So now you're holding that in an account. You could form an SPV where you put these shares in and then deposit tokens on that SPV essentially. So at the end of the day, you want each token to be fully backed by whatever's behind it. In this case, it's going to be the BlackRock ETF. And so let's say, Mike, you as the buyer, you're only interacting with the token. So as long as, Ondo or whoever issuer is doing their job and properly backing your token, you should rest assured that everything's flowing through you on the distribution side. So whatever yield is passing through those ETFs, the issuer collects, they'll take a smaller management cutout for being that face and that issuer, and then passing it through to you. And this is also where kind of the whole, like, think about Chainlink, think about Invenium, think about Oracle's, and even on-chain auditors to verify holdings, proof of reserves. This is a whole thing in the stablecoin space that's just as important now. Maybe it's even better and improved. I can't speak directly on that with like professionally managed products in the back. But that's typically the process. So a lot of these are holding traditional funds in the escrow, I'll call it, and then issuing tokens that are backed by that. To my knowledge, another cool example of like Open Eden does individual treasuries, fully bankrupt remote, and they're issuing it on the treasury itself rather than a treasury fund. I don't know many others that are doing that on the individual product level versus the fund level, but it's also a cool distinction that'll come more apparent as people really look at this and as we find bigger buyers, frankly.
Yeah, that's fascinating. You mentioned the tech as one framework, right, from a tokenization perspective. I'm curious. Obviously, there's a lot of platforms out there. What do you see in the space? I mean, obviously, um, distribution can be a challenge, right, in certain cases. I'm just curious, kind of what you guys are seeing in that realm as well.
Yeah, we're starting to see a lot of activity across really three sectors, right? I would call it on the one end, you have Wall Street. So just in the last 2 years alone, Goldman Sachs, JP Morgan, UBS just recently went live, HSBC, the names go on in terms of they have publicly announced commercial services and partnered in some cases, like the Canton Network to actually go to the market and go to their clients and say, hey, we actually have a tokenization solution for you. So I expect to see when it comes to distribution on Wall Street, that's not their weakness. So that's usually their strength. But of course, getting insights into how their technology is being used and how open that is to the rest of the market, that's become a little bit more challenging. That's where you move on to the second side of the market. You've got a lot of what we call startup leaders, right? Securitized, T Zero Figure, who Peter was just referring to, and there are many, many others. They're kind of like taking on the incumbent, saying we've built the technology. They've got the licensure in place. They've made a lot of great partnerships with a lot of public blockchains and other solutions. However, just like with any chicken and the egg, building a marketplace is very difficult. So that distribution tends to be a little bit weaker. It's one of the criticisms that today there isn't a lot of liquidity and not a lot of technical volume happening. And then the last cohort, if you will, is of course from that sort of crypto sector, from the DeFi sector, saying, "Hey, we understand this technology very well. We'd also like to figure out how we can go ahead and leverage this technology for on-chain finance, for capital markets. So these treasuries use cases, as well as trade finance and other sort of real world assets, as they call them, have been tokenized and made available typically internationally exclusively, given the regulation in the United States makes that pretty difficult. But, this is just a point of that this is a global movement, that there are, capital markets around the world are going to get tokenized in various jurisdictions. And it almost creates an opportunity of a little bit of regulatory arbitrage, if you will, for some of these what we're seeing a lot of island nations and such saying, hey, we're going to create digital venues for people to come trade securities on with us because the United States is going to move a little slower on developing that. So it's very interesting that I think this year, to your point, Skylar, is that there's going to be a focus around distribution, around liquidity, because this is sort of the main promise. But speaking on use cases, like we can't forget how valuable it is to be able to automatically calculate waterfalls and do distributions, right? Or how valuable it is for repo markets that do trillions in volume to be able to settle instantly on chain, those small value savings, how that is just, also in the background going to radically disrupt capital markets.
Now, those are great points, and putting my fund admin cap on, if you will, just from an operational efficiencies point of view, it's a huge thing, right? To be able to efficiently process that data and transaction activity, as you guys mentioned, even on T on a daily basis. Even just from a LP interest perspective, for the GP to be able to keep the assets in the portfolio and doesn't have to sell if there's redemption. Now you can just move into more of a secondary market. That's definitely a new thing that's very exciting for many fund managers that I speak with, right, as an option. I'm curious, just from a size of the opportunity. I know people throw around different numbers. What are you guys seeing as what people are saying from a size of opportunity going forward in this space of tokenization? What does that look like?
Yeah, I mean, the opportunities, like anything that could be tokenized is just like anything in cap markets could technically be tokenized. Initially, the whole thing was, oh, look at the real estate and the private equity market. And now it's like, look at real estate, private equity, look at repo transactions. We're already hitting 8 trillion in repo transactions on chain.
Wow.
In 2023 alone. And then it's like, look at that, and then look at securities lending. Eventually look at derivatives. So it's just absolutely enormous. But even like, market sizing today, it's a common misconception that there's only like 400 million of on-chain assets, or I've seen like 800 million between treasuries and private credit. And that's like really only one. Okay, those are two pieces of the story right there. And then, like we track at stm.co a bunch of the real estate trading data, for example, a bunch of the pre-IPO shares on overseas compliant regulated marketplaces, on US ATSs. We have the aforementioned, figure asset-backed securities issuance is already almost hitting 10 billion at the end of 2023 when those numbers really come in. So, I think a lot see the low hanging fruit of what's already out there right now, but that's just the tip of the iceberg from what people even know that already exists. And then beyond that, what's going to come on chain is going to be even more insane.
That's really
I like to quantify it actually as, instead of just looking at it as, these $1 trillion bond markets, debt markets, real estate markets, public equities, you name it. I kind of look at it actually as just quantifying it from a liquidity premium, right? Is how much are people paying for extra, and how much is it more difficult to manage liquidity for private markets, and that gets factored into the liquidity premium, right? So if you can save, or make 30% or increase the value of an asset by 30% by making it more liquid, and also I would say more functional. I often talk about it like financial services, right? It's not easy for someone to just go and take their stock and go get a loan against it. But in a tokenized format, it would be super simple. You wouldn't even need to technically intervene with another person. There could be protocols set up that operate, in this tokenized ecosystem that say, okay, Peter has his shares of his treasury shares. Well, we'll go ahead and automatically offer rates, and he can lock in his security token. That's his collateral that he's given to me. And boom, I can automatically give him some USDC. That's all done on chain automatically. And Peter can quickly access that value. So to me, it's being able to add financial services like collateralizations, transfers to other people, trading it in certain markets to a security or an asset. Well, that's how you quantify this tokenization opportunity. If that number is 30%, then that's significant. Obviously, that's 30% more across all capital markets. That's a huge opportunity.
Yeah, that's huge. And talk to us about the liquidity aspect. So you mentioned real estate, private funds, private equity. Talk to us about how this increases liquidity?
Yeah, I won't say that automatically throwing things on chain equals liquidity. That's like a very common misconception, I think, that's been around the space for quite some time. It's more so of a call option, in my opinion. The real, like, institutional asset managers are really issuing assets on chain for the initial operational savings and efficiencies, let's call it. I didn't say this even before my spiel, but like digital bonds is a whole nother segment that's very popular among the banking platforms. Goldman itself issued, their first official product a year ago now, January 2023. I think it was a European investment bank, $102 million bond. It was like 100 million euro, let's call it actually. And they saved like 150,000 euro in the process relative to the traditional. Okay, not bad. Small amount for a single offering. Pretty good though, not bad. It's 150 grand. You can't ignore. You could pass that. I think they passed it through to Union Investment as a sole buyer. So that manager just upped his yield just like that, even by a little bit. And that's one single thing. When you're doing that at scale, whether it's 10 bond issuances together, 15, 20 at $1 billion versus 100 million, that's going to be extremely tangible and material. And so you're talking, so that's like something that asset managers are looking at, and institutions really focus on: where can I save that? Where can I use that yield or deploy resources a bit more efficiently? And then beyond that is where you'll kind of see liquidity, and that'll become a focus. And you'll see market makers on board, but frankly, right now it's all kind of on the crowd to fluff organic buy and sell orders, which is why a lot of the ATSs are, not floundering, but it's definitely a bit more stagnant than the whole promise would be. But as Herwig and I chat about internally a lot, like we were looking at the numbers the other day on trading, and even a little bit of liquidity on a liquid Series B asset is more than you'll get elsewhere in the market. So I think it's kind of baby steps moving that way.
That's great. Yeah, that's very interesting. I'm curious, what are you guys most excited about that we maybe haven't seen adopted yet going forward here? from your guys' perspective?
Definitely one of the mega trends we've seen in DeFi, but also what we're going to start seeing. Even JPM has a tokenized collateral network as part of Onyx that we've seen BlackRock and others already take advantage of. So to me, it's yield, but specifically collateralization. So it's like, okay, the yield is the driving factor. And I think especially this year across the board. So people are going to be looking for those opportunities, especially in a tokenized fashion. But the idea, and specifically for RWAs or for tokenized assets, per to our point about the fact that you're not going to see huge amounts of trading volumes for small cap assets. Well, the other way to get liquidity is through collateralization. And so I believe you're going to start seeing a lot of lenders start to come into this space because unlike with these crypto lenders in the past where we've seen a lot of blowups like with BlockFi and such, we're talking about real assets that can be valued, that can be appraised in some cases, that are much easier to actually be able to underwrite and actually give a loan against. And so I think instead of the market blowing up because we've got all these amazing products that are trading, it's actually no, there's a lot of money just going into yield-based products that are then just getting locked up and collateralized and used efficiently in other cases, sometimes for more investing. And so I think that's what's really going to help unlock a lot of these assets. Meanwhile, we're going to see a lot of the usual proof of concepts and trials and announcements from bigger firms, and we're going to see deals with sponsors that we just haven't seen before, right? With brand name recognizable sponsors, and that's a big deal. Arguably, in the past, of course, for distribution, who's behind it, who's underwriting it, who's supporting it, that makes an impact. So to see sort of big name banks and big name sponsors come into products, I think that's also going to bring in a whole new wave of investors that previously just didn't care about, let's just say the more unreliable quality of products that were available before. So that's sort of my two predictions, but maybe Peter has some other ones.
No, I mean, that's pretty spot on. And you're even seeing, Moody's, Morningstar, a few more boutique startup rating agencies rate these types of products, whether the asset-backed security side, Morningstar, and the private fund side, Moody's. But really also like thinking about everything from the buy side and really how can we put these products in the hands of some serious capital. You can't ignore what like Apollo, Wisdom Tree, JP Morgan, Avalanche, Providence Blockchain, Oasis Pro, and Axelar have been doing with their kind of wealth management portfolio management solution, basically enabling instantaneous rebalancing and portfolio reconstruction via model portfolios for a range of clients, all with tokenized products. And our thesis that we wrote about even in one of our, I think, year start newsletters was that for other asset managers to gain access to this universe now of these wealth managers and their groups, they're going to have to bring assets on chain, whether, like we talked about before, feeder funds or slices or tranches of existing products or digitally native products to gain access to kind of what's going on there. I think it'd be super powerful. You're seeing it. They're projecting it to remove 3,000 steps in the interaction process with clients, with reconstruction, with rebalancing, and back office work. So I think that's something you can't ignore. Also, if you're in the portfolio management side, so it's not just real estate, private credit, private equity anymore. It's asset management across the bat.
Yeah, no, I think if I just wanted to add on to that, to Peter's point about, this year, we are going to see a lot more sort of RIAs and other distribution channels start to tap into these products more. And what I think I'm most excited for, that I will say for, this might not be relevant to us this year, but maybe next year or the year after, like Asia's on fire. Singapore, Japan, South Korea, Hong Kong, many other areas are exploring tokenization. They have supportive regulators. And why I'm saying this is because in a few years, it means we're also going to start to suddenly get access to a wide variety of investment opportunities that are suddenly all around the world. Not just sort of in your backyard or in the US economy. So that's going to be a really cool change, I think, in the future.
Yeah, you mentioned countries. Talk to us about these different regions. Where you guys seeing the most activity? You mentioned Asia. Maybe talk to us a little bit about the regulatory scene as well.
Yeah, I think a lot of all the promise is in the U.S., but right now, like Singapore is almost a clear cut trailblazer, being extremely pro blockchain, crypto, tokenization specifically. Project Guardian is under the Monetary Authority of Singapore, which is that aforementioned Apollo, JPM, Wisdom Tree deal we talked about. But there's really good platforms out there. ADDX, SDAX. They're actually finding real Alta. They're finding real buyers. They're working with groups like Hamilton Lane. They're working. We actually have some clients on the mortgage side and the real estate side working with those types of firms out there. They're solving solid problems on the distribution and the tokenization, which is usually it comes one or the other, and we're really trying to bridge that gap. But not even just harping on that, I would say Abu Dhabi and that area specifically. You see Coinbase and Coinbase Asset Management roll out their Project Diamond, pretty much as infrastructure that leverages some of the best that Coinbase has to offer: the brand name, the custody, the Prime wallet, as like a grocery store, if you will, of tokenized products, and then CBAM, Coinbase Asset Management, being that white glove service that is looking to kind of usher in other asset managers alongside itself. And that's, again, not the only company doing that in that region. We also have Sologenic. We have other firms trailblazing in Dubai and finding some product market fit out there. Switzerland's always been pretty pro. A lot of that has to originate within Switzerland itself, though. But SDX, Swiss Digital Exchange, you can't knock them. They work directly with SIX, the traditional exchange out there, on digital bond issuances. They offer back and forth support for the digital and the traditional product, working with groups like UBS on some of the largest bond placements in history. In fact, around $400 million last November, 2022. Sorry, 2 Novembers ago. But yeah, I mean, that's just a couple that jump in me specifically, and I think Herwig may have his own thoughts as well.
I think that's a great rundown. And as I mentioned already, the APAC region, I think the only one we didn't really cover is England, London, the UK. They have a very, fast moving, adopting ecosystem there. There's a company called Archax that has done the work to get the licensing in place to act as sort of a secondary market. They've been working with Aberdeen, mega's huge asset manager, as well as there's been a lot of policy and a lot of research that has come out of the UK, which basically shows once again the common theme throughout all these areas that we've mentioned is a supportive regulatory body, in many cases setting up sandboxes where fintech companies or existing, TradFi firms can approach them and say, hey, we would like to do this use case, usually in tokenization. And, they'll then get supported regulatory oversight and support to be able to go ahead and try out these different use cases without fear of repercussion, which is what happens here in the United States, because there just isn't that kind of clarity. I will also say MiFID in Europe is definitely also laying the foundation and at least helping define, which again is something lacking in the United States, that we've seen dozens of countries around the world in the form of legislation basically write that they see tokenized securities as traditional securities and all the same rules apply. And that kind of sounds like it doesn't mean a lot or it shouldn't matter, but it does, because that lack of certainty for investors, for issuers, for all stakeholders creates a problem. And so by simply just confirming, yes, by following these rules and by using tokenization, now suddenly in Europe, a CSD, a securities depository, central securities depository, can use a blockchain, or I can use a blockchain as my ledger for tracking my cap table. Like that makes a big difference in helping with adoption and creating these new infrastructures around the world. And so the U.S. definitely does kind of get left behind in that, but in many ways, we recognize that it's because they can afford to be a little slow on this, especially since we know that that hasn't stopped the biggest banks and many players here in the United States from operating. So it's just, again, it's that lack of clarity that definitely would help, that I'm not so sure we're going to get anytime soon, to be honest.
Yeah, that's always tough, right? Regulatory clarity is what we all want and need. A standard template to work off, if you will, or playbook. I'm curious from a standardization point of view, as we kind of just mentioned that, operationally, what chains are being used to build on from a tokenization perspective? What does that look like? I'm just curious if there's any type of standardization around the tokenization process, or how is everybody different?
There's not. Short answer. Everyone tries to build it, and you have these smaller consortiums. I think Herwig mentioned the Canton network earlier. You got like the ERC coalitions. You have all these groups who say they have obviously the best offering, and they buy into one. But then the reality is, you got some of the biggest banks saying, we're not going to touch a public chain until we know exactly who's operating nodes. You got others using public chains just on a more permissioned subnet, or that's Avalanche specifically, a little subset within that. It's so unstandardized, and the fact is, some of the companies that are doing better than others in the space on the issuance and the brokerage side are actually just supporting everything they see. We could support maybe R3's Corda, we could support DAML through digital asset, we could support Coinbase's Ethereum layer 2 base, we could support Avalanche Providence blockchain. It's really across the map, super unstandardized. If you want high frequency trading eventually, maybe it makes sense for a public chain. If you really have something more tailored, like the digital bonds through Goldman, then maybe you could just keep ripping with them on the private side. But also,
are there risks to these private chains?
It's the hindrance that a lot of people tout is that to maintain the private chain relative to a public chain's growth, it'll be so expensive to pay your own developers. But really, that comes down to what level is a chain at right now for what you need, and how much really do we need to deploy more into that. There's a lot of these face value comments that you can't really buy into without digging in heavy, and also recognizing the use case for everything. Like a common thing that Herwig has been hearing way longer than I have on the advisory side is saying, we want to use so and so chain because they could handle 100,000 transactions per second. That's great, but find me someone who's going to be trading 100,000 of your real estate tokens every second.
Right.
You probably don't need it in reality. And then maybe you go over in the derivative side or sec lending. Maybe that's something where it becomes more pertinent, and that makes sense. But also, like, just as a final, stop rambling, it's like you look at what Chainlink and their cross-chain interoperability protocol is doing, and their cross-chain transfer protocol. It's like a lot of this is now just being bridged across all these different blockchains. So I think we see most commonly on our advisory side issuers, and we kind of help show them, think about the ecosystem you want to play in initially. If you think Ethereum is the most robust for what you're doing, then maybe that makes sense. If you think Avalanche and their permissioned subnets are the best option for you as an institution, along with their Spruce participants, that makes sense. If you think you want something more tailor made and very financial service close knit, maybe Providence blockchain is your go-to. So it's still very nuanced to get back to the standardization question.
No, that makes sense. There's a lot of devil's always in the details, right? From what we're talking about here. And you mentioned obviously some misconceptions that people have, to your point, when they kind of think about this with the questions they have. Is there any other misconceptions in the space as you guys talked to a lot of people who are looking to build these products? What other things that come up, you guys, that's maybe just a bit, completely incorrect?
I'll let Herwig throw his thoughts in after, but I think the idea of that, like, tokenizing and then automatically it will reflect like the underlying value, and kind of take the work out of everything isn't always true. It's still like, this is why Chainlink, Invenium, certain other data oracles popping up provide such a strong value add, in my opinion. You still need to figure out how to bridge the gap from data from a Chicago commercial real estate building. Like, just because it's tokenized, it's not going to automatically feed data to the end, to Skylar as the end token holder. So there's still a lot of plumbing, and this is a good thing. This means there's a new opportunity to enter the space and to even stay ahead of the game, to bridge that gap and to really create a robust, like, flowing system, if you will, on the plumbing. And I think that's something that's kind of interesting to me about really how to solve. And then even like you guys on the fund admin side, there's a lot of distribution questions to still solve, and that a lot of these companies have built like one-stop shops that could do everything, but at the same time you need to make sure you're hitting the proper investor and end user base that you're looking for. And a lot of that power, in my opinion, still resides with the largest custodians in the space, the large scale fund admins, and even like wirehouses and brokerages that just simply have that distribution. So always good things to keep on your radar.
Yeah, those are great points. And obviously data friction and challenges on the fund admin side is a very much a real big problem that all of us need to solve in that space. And hopefully with some of this kind of being pushed forward, that can be resolved throughout the coming years for sure. But yeah, definitely great points there.
Yeah, I'm happy to kind of just again harp on the liquidity angle. Tokenizing something does not make it more liquid. There isn't suddenly a whole market of people that want to buy something just because it's tokenized. It makes liquidity easier. You're not going around telling people that, hey, you should invest in my business because I'm using a better version of Excel. Because that's all what we're talking about here is we're eliminating PDFs, we're eliminating Excel, but you're not going to investors saying, I've got this great investment opportunity. And by the way, it's on a better version of Excel. That's why you should invest. Nobody cares ultimately that it's tokenized. At the end of the day, it makes it easier to create liquidity because it's now easier to access investors. You can fractionalize and lower your minimum ticket, threshold, and so that opens up a bigger network of investors, and they can now access that product digitally. And they have increased tools, as I mentioned, financial services, potentially collateralization, trading, a venue to do these things at, the ability to even transfer it directly to somebody and gift or trade it OTC, like that is now possible digitally. But that does not make your pardon my French, dog shit asset any more liquid, right? It doesn't make it any more interesting to buyers. So at least not the right kind, I would think. So that's my only message is definitely you should not look at this as some kind of saving grace. You should be looking at this as a better way for me to manage my investors, to do distributions, to potentially create liquidity for my potentially illiquid, private shares or LP units or whatever. But it certainly doesn't mean that there's suddenly an army of crypto investors or brokers and investment bankers that are like, oh yay, it's now it's on Avalanche. You take all my money. It's like that's not how this works. So, and of course we're happy to help anybody understand and take advantage of the technology and do this the right way. That's what we have a business in doing. So.
I
That's well
want to
said.
pony up that because he's Herwig spot on with that. And also a misconception is when I see a lot of this, it's going to democratize investment for all. Like yeah, sure, it could be true. And we're seeing that kind of on the money market side. And we said, but really internationally only right now. The real value add is like from the issuer standpoint, everyone's racing to collect new AUM, right? That's a tale as old as time. And that's going to always be the name of the game. The more permanent capital you have, the more AUM you can rotate in, the more fees you can suck up for your people, and that's how it goes. And when you look at this, like you're leaving a lot of money on the table as an issuer who can only take on check sizes like 2 million, $1 million even. To Herwig's point, when these are on chain, the real efficiency you're seeing is the investor management. So you don't have to reconcile a bunch of $10 checks nonstop with your back office. You're going to have to, quadruple your back office to keep at par with that. But rather, even if something is still only available to a qualified purchaser, like a Hamilton Lane fund through Securitize, for example, okay, the minimum buy-in on the traditional fund is $1 million. If I'm a QP, a small wealth manager, super small book, maybe I have 5 million, 8 million in assets. You're telling me I got to put a fifth of my collective book into one single fund to get access. That's also probably just going to be a no-go. If I could just maybe Skylar, maybe Mike, they each want, 100 grand worth of allocation. Now that it's tokenized, I could simply rebalance and reallocate for them. And that's where I see a lot of the value prop. To the point about the Apollo stuff before, the portfolio management, that's a huge value prop that's going to rotate into all those those smaller scale accreds, qualified purchasers before the major institutions. And that right there is how companies like Wisdom Tree, Franklin will achieve new AUM and kind of meet these new goals in those smaller pockets of considerable wealth. So just 2 cents right there as well to keep an eye on when you see this type of stuff come out.
Yeah. I'm even thinking from the fund management side of the business, like maybe people are going to, a lot of people go with Skylar. You could probably talk deeper on this than I can, but, when it comes to uh, creating different fund structures, maybe more people want to do Reg A where they could have access to more investors at lower quantities. If you guys have any
100%.
thoughts on that?
Yeah, yeah, definitely. It's yeah, there's a lot of things that can solve for. I always just go with what's the use case you're solving for? What are you solving for in your business, whether it be asset management or other financial firms, right? People, it's not what it is, but what it does, right? So nobody cares about what browser you're using these days on the internet. Just what does it do for me, right? What's the end goal? I think that's your guys'
It's
point.
actually a
Yeah.
That's a common problem we see with our clients, especially the bigger ones, is where do we begin? Because there's just so much opportunity.
Yeah. Yeah. Great point.
I don't know how to ask this question, but I'm curious. Are you guys seeing anything in terms of like AI or, machine learning coming into this space to help, maybe make things more efficient or what are you guys seeing on those fronts?
Oh, AI is definitely going to make a role or play a role in this industry. The way to look at AI is, AI is nothing without data, and a blockchain is a better data management solution, right? Especially when we're talking about financial data. So, any efficient AI in the future for that has any business to do with capital markets, they're going to be relying most likely on this on-chain information. They're most likely going to need it in order to be able to be properly, useful to the market. So that's why actually, I don't really see AI succeeding too much without blockchain for capital markets. But I even saw recently just somebody, I'm actually just blanking on the name, but somebody, I think it was the Tokenizer. They announced an AI where basically you can ask it questions regarding all assets that are tokenized. So show me, what real estate products live on Avalanche, and then it would spit out, a summary of here's all that, or tell me about the difference between tokenization versus cryptos. So it's like this idea of you might be able to get some kind of an assistant to help you guide and maybe even eventually give you financial advice. Could be a use case for AI. Of course, AI eventually being able to even pick up on certain, as perfect as blockchain can be for data management, there's always going to be potentially errors or wrong information that somebody input. And an AI might be able to better fix that or detect that or clean that up or even, again, manage data a better way than, say, a human can. But I think it's still super early days where we're going to see anything major interact with tokenization in AI. I think it's, again, you're going to need that foundation first, and then very quickly we're going to see, AI solutions or applications get spun up against these data sets, against these economies and ecosystems. Because imagine, like, in order to be able to say, hey, AI, go ahead and transfer my stock or sell my real estate holdings or do this, and have it perform that for you, you would need financial markets to have the foundation to be able to do that. And, AI just would not be able to do that today just because of the infrastructure capital markets are built on today wouldn't allow for an AI to actually be able to transfer and authorize and make, shares transfer happen. But if it was all on chain, well, then an AI could actually do that. And so you might see, again, AI assistants, financial advisors, and other kind of use cases come out of that.
Yeah, that's a great insight there, Herwig. And I think just to your point, data obviously is everything that's built. Everything's built on data, right? And in the legacy financial system, whether it be fund administration, fund services, that data is very fragmented, across different systems that are not interconnected. So the tokenization process, everything on blockchain provides an interconnectivity and auditability that's never happened before, and an efficiency play. And you take AI on top of that, and definitely provides a unique insight and augmented scale that has never happened before. So I'm curious to see down the road what we see with that and where it goes for sure. But yeah, great points there.
You said it way more eloquently than me, Skylar.
It's like that's big thoughts. I mean, that's really almost like the cleanest data source available for AI.
Yeah,
really interesting to think about.
Yeah.
Awesome. Well, Peter and Herwig, this has been a lot of fun. I've learned a lot chatting with you guys. Thank you so much for the time. Where can people go to connect and learn more about you guys?
So, we, as we kind of talked about, we do a couple of different things. STM.co, that's the easiest, quickest way you can type in your browser to just tap into all things tokenization. You want to see what's happening in the markets, what's coming out, what are the prices. That's where you go. However, if you're looking for some consulting services, you want some high touch, some help from Peter and I and the team, securitytokenadvisors.com, or We actually do have a brand new platform that's powered by both Security Token Advisors and Security Token Market. It's where we house all our research. It's where we're putting out all our news and charts, and we actually have a lot of cool community features and webinars in there too. That's called Security Token Prime, securitytokenprime.com, completely free to sign up. So hopefully we see everybody in there to continue the conversation.
Yeah, that's great, guys. And definitely, I think also you guys are doing a conference or event coming up, right? I don't know if you want to mention that.
That is right. We do. It'll be in May. Tokenize This. We did it virtually last year. We had such a success. Thousands of people tuned in. A lot of great speakers. So we knew we had to do it again in person. We're famously well known for being in Miami. So of course we had to do it in Miami. It's going to be a very great setup. Hopefully over 1,000 people all in the same area talking about tokenization, RWAs, everything we discussed today, but hopefully with a chance to hear from the rest of the industry and from other leaders. So we hope you can join us there. Ticket sales are not quite live yet, so you can sign up to be notified at summit.stm.com.
Fantastic.
.co, sorry.
Oh, that's very cool. Yeah, that's awesome. We'll put that in the show notes, guys. This has been a blast, and I look forward to seeing you guys in Miami. That'd be amazing.
Likewise.
Thanks for watching. We hope you enjoyed this conversation. Please make sure to like and subscribe for more information like this. Once again, we're filling up the calendar for 2024, so if you're interested in joining us in the show, drop us an email, info@allfunds.io. Check out everything in the description below to connect with us and Securities Token Group.